We conducted a study to determine the key success factors that enabled new entrants to fragment the market. In this study, we analyzed factors missing in cases that failed and found out that the cases which succeeded involved either a superior market structure or a cartel of committed liquidity providers. Initial attempts to divert liquidity in Europe failed as a result of a lack of significant differentiation. The table below shows different platforms and compares how the service they offer differs from that of the incumbent. For example, DTS Eurosets failed, despite the unusual degree of user discontent with the incumbent exchange, as Euronext immediately matched DTS pricing. A quick look at the graph below illustrates how Euronext strengthened its market share in Dutch stocks turnover. Successful cases of order flow diversion have involved superior market structure which was not immediately replicable by the incumbent or have involved cartels of committed liquidity providers. Below, we can see examples of successful cases of order flow diversion, with the most recent case being Chi-X in Europe and Bets and Direct Edge in the US. The chart below illustrates how Bets increased its market share after high-frequency traders, or HFTs, and brokers acquired equity stakes in the ECN and committed the liquidity. Similarly, Direct Edge only gained market share after Knight, Citadel, and Goldman Sachs invested and committed the liquidity. In the case of Chi-X, it has been very successful across Europe with Getco as its major liquidity provider. Chi-X KSF included a jump ball program which gave members with significant trading volume the opportunity for equity participation, as shown in the graph below. In the case of Neuro, also known as Nasdaq OMX Europe, it failed due to its late entry and lack of committed liquidity providers. We can see from the chart that Neuro's market share dropped to zero almost a year after reaching its peak in 4Q09. Finally, in the case of Turquoise, the MTF only managed to gain around 5% market share as the consortium of founding brokers lost interest in operating the venue after their goal of fragmentation was achieved by Chi-X.